Welcome back, traders. Today, I'm sharing a straightforward and highly effective model that requires no complex narratives or bias, just pure price action and precision. The funded model. This model is simple, clear, and, if used exactly as I'm about to teach you, it can help you secure your funded account much faster. The core of this model lies in candle range theory. It's a simple yet powerful concept that helps you understand price movements better, spot critical ranges, and identify high probability trades without overcomplicating things. CRT allows us to work with clean charts, focusing only on what truly matters. If you're someone who struggles with trading narratives or has been overwhelmed by conflicting signals in the market, this model is for you. I'll walk you through the entire process step by step so you can apply it to your trading immediately and start seeing results. This is a game-changing approach for those looking to pass funded challenges quickly and efficiently. No extra fluff, no unnecessary tools, just a practical rules-based system. So stick with me till the end because every step matters. Before we dive in, make sure to hit that like button, subscribe to the channel, and let's get started. Let's break down the funded model checklist step by step. Follow this process for consistent results. First, you need to mark the high and low of the previous day. This gives us key areas of liquidity where price is most likely to react. The next step is patience. Wait for the price to take out either the previous day's high or low. This is critical because it signals a sweep of liquidity, which often precedes a reversal or continuation move. Once the sweep happens, switch to the 15-minute time frame and wait for a 15-minute CRT to form. This confirms that the market is going to in your favor. At this point, look for SMT confirmation with correlated pairs. If a related pair isn't showing the same movement, this divergence strengthens our trade idea. Now hop onto the 1-minute time frame for precision entry. This allows you to refine your entry point while keeping your risk minimal. Finally, enter the trade only after confirming one of these entry models. CSD, change in state of delivery. MSS, market structure shift. Inversion entry model, or breaker entry model. These confirmations ensure you're trading with the smart money flow. One crucial warning: do not trade if the price rebalances the IRL, internal range liquidity, first, and then sweeps the previous day, low high. This condition invalidates the setup, so stay disciplined and wait for the right opportunity. Now let's talk about risk management. This is the backbone of any successful trading setup. Even the best strategy will fail without proper risk control. Here are the key principles you must follow. Focus on 2 to 3 RR only. Every trade you take should have a risk-to-reward ratio of at least 2 to 1 or 3 to 1. This means you're risking 1 to gain 2 or 3, giving you a significant edge over time. Take 1% or 0.5% risk. Per trade, never risk more than 1% or 0.5% of your capital on a single trade. This keeps your account safe from major drawdowns and allows you to stay in the game long term. Trade 2 to 3 pairs only. If you're trading this model daily, focus on just 2 to 3 pairs. Spreading yourself too thin across multiple pairs will dilute your focus and lead to overtrading. Don't overtrade. Wait for your setup. Overtrading is one of the biggest account killers. Remember, quality over quantity. Wait for all the conditions of the checklist to align before you enter a trade. If there's no setup, don't force it. Patience will pay off in the long run. Risk management is all about protecting your capital. Even if you win only 40 to 50% of your trades, a proper RR and strict risk per trade will keep you profitable. To recap, the funded model gives you a structured approach to trading, and when combined with solid risk management, it's a recipe for success. Follow the checklist, stick to the plan, and most importantly, be disciplined. Trading is a marathon, not a sprint. Before moving to live charts, let's look at a schematic depiction of how this setup works. We have the previous day's range, including the previous day's high and low. You need to mark the previous day's high and low on your chart and switch to the 15-minute chart. As soon as the 15-minute candle sweeps liquidity on one side and the next candle sweeps its high or low while closing inside, you should mark the high and low of the previous candle as a CRT. If you are a beginner, The candle body closing inside the previous candle is essential. You should only trade the third candle. If you are an experienced trader and the candle body closes outside the range, known as a TBS, turtle body soup, you can still trade it. However, confirmation through SMT is essential. No SMT, no trade. This is a powerful confirmation tool that you must include into your trading. If you don't know how to use SMT, let me know in the comment box and I will create a video on it. As soon as you get an inside candle closure, you can trade the third candle and target the opposite end of the CRT range. As mentioned in previous slides, if the price rebalances the internal range liquidity of the 15-minute chart before taking the previous day's high or low, the setup is invalid. This indicates a continuation, not a reversal. This is a higher time frame protocol you must strictly follow for the funded model. Let's move to the next slide and see how this setup looks on a lower time frame and how to trade it. Here you can see that after sweeping the previous day's low and also sweeping the 15-minute CRT low with a candle closing inside, you will be a buyer below the opening of the third candle. As soon as the second candle closes inside, CSD or MSS, market structure shift, will be confirmed. Once the price taps into the order block, you can enter the trade. Alternatively, you can use the inversion entry model or breaker entry, whichever you prefer. You can target the 15-minute CRT high or internal range liquidity, and vice versa for bearish scenario. However, I suggest closing 80% of your trade at the opposing end of the CRT range. This will increase your win ratio and secure your capital. Now let's move to live charts. We'll review some real-time examples to see how this model works. Alright guys, in our first example, we have S&P 500 daily chart. Here, you can see that the price has swept the previous day's high, and also a bearish fair value gap is overlapping. So, this is a high probability setup. Now, let's switch to the 15-minute chart to look for CRT to form. So, we have switched to the 15-minute chart, and you can see these fair value gaps here, which act as internal range liquidity, IRL. Notice that the price did not rebalance these imbalances before sweeping the previous day's high. This validates our setup, as we studied earlier. If the price tags the IRL before sweeping the previous day's high or low, it invalidates our setup and results in a continuation. Alright, after sweeping the previous day's high, we have this big, bulky candle, which is our 15-minute CRT. These two inside bars following it make the CRT even higher probability. So, we mark the high and low of this CRT range. One important thing to note here is that the 15-minute CRT high was swept with the body, making it a type of turtle soup setup, which is high probability. I have also explained this in my previous video, so we'll mark this as turtle body soup, TBS. Now let's switch to the 1-minute chart to confirm the entry. Alright, we are on the 1-minute chart now. Here, you can see that after sweeping the 15-minute CRT high, the price closed below this last thick up-close candle. This confirms the change in the state of delivery, CSD, which is our entry model number 1. Additionally, the price has also created a market structure shift, MSS. For those following the ICT 20.22 model, they can take an entry from the fair value gap after the market structure shift. Alternatively, if you're using the inversion entry model, this is our inversion entry point, and also price has created SMT with NASDAQ here. This SMT confirms both the MSS and CSD. So, we enter a sell trade here, placing our stop loss just above this swing, and target either the opposing end of the CRT or the 15-minute internal range liquidity. The price has hit both targets and offered a 6.93 RR trade. You can use any entry model you're confident with, MSS, entry model number 1, or the inversion entry model. You can see how we followed the checklist step by step. By doing the same, you can catch high-quality trade setups. Let's move on to our next example. In this example, we are looking at the daily chart of gold. You can see that the price has swept the previous day's high, and also we have a bearish fair value gap. Let's mark it. Next, we will switch to the 15-minute time frame and look for a 15-minute CRT to form. Alright, we have switched to the 15-minute chart, and you can see these fair value gaps, which act as internal range liquidity. Let's mark them. As we studied earlier, the price didn't fill these fair value gaps before sweeping the previous day's high, making this a high probability setup. Here, you can see that after the price swept the previous day's high, it also swept the high of this 15-minute candle and closed inside. We will mark this candle as our CRT range. Next, hop onto the lower time frame and see how this setup played out. On the 1-minute time frame, you can see that after sweeping the CRT high, the price closed below this last thick up-close candle. This confirms our entry model number 1. Additionally, a fair value gap was created. Let's mark it. From here, you can open a short trade. Place your stop loss just above the swing high, and you can target either the opposing end of the CRT range or the 15-minute internal range liquidity. As you can see, this is how you trade the funded model and follow the checklist. Believe me, it's a very high probability model. You don't need any bias or narrative. It's simple and effective. If you study 2 to 3 pairs and apply what I've taught you, you'll be able to catch some great setups. If you stay disciplined and follow risk management, you can secure a funded account very quickly. If you're interested, let me know in the comments. In the next video, I'll teach you how to catch the full day's range using this model. I hope you enjoyed this video. For more trading insights and information, join my Telegram channel. Good luck with your trades, and see you in the next one.